You look at that WASD, and as you know, Stu, typically December is not a time when a lot of adjustments get made. Production hasn't been adjusted in December, I believe, for 20 years, and they kept that up. We didn't have any production adjustments. But whenever you look over at demand, you might see a small adjustment sometimes in December, but I think the USDA showed us that 150 million bushel increase in exports, that they're paying attention. They see what's going on, and they don't necessarily see that these are all exports due to front loading of tariffs. They feel like maybe Mexico is going to hang right in there. And so as far as corn grind for ethanol, 50 million bushel increase is not what we had in the cards. We predicted 25 and then 75 for exports. We thought they'd make adjustments. I just didn't think we'd see 200 million. But 25 for corn grind for ethanol, to me, made more sense. And the reason for that, Stu, is that here over the last 3 weeks, we've seen those margins really get ground down a little bit as far as the corn grind goes. And so you got to be a little bit concerned that the current slowdown we're seeing, which isn't big, but it's 4% off of the high that we had like 3 weeks ago. I think that you're going to see more of that. We're hearing more plants that are slowing down a little bit. Today, we've got crude oil back over $70. So if you could see the crude oil market kind of take hold and stay strong, maybe those margins kind of come back in. But the 50 million bushel increase, in my opinion, could have to be adjusted back lower later. But regardless, that was a really good report. Here's the problem. Those gains are gone. I mean, if you would have told me on Monday morning that on Tuesday morning we were going to get a 200 million bushel increase, I would have said we're going to be up 15 cents tomorrow, and we got 7 cents out of it, and it's all gone now. So it tells you what I'd like to say is this: 1.738 is still a lot of corn. It's better than what it could have been, but it's still a lot of corn. So we have to understand that and how that works.
And cash prices have responded over the last month.
Yeah.
But that may come to an end because a lot of farmers are going to get rid of corn
for sure
after the first day of January.
Absolutely. And it's not just after the first day of January. You've seen basis come back. If you look at the flat cash rally off the harvest lows, some folks have enjoyed as much as a 60-cent rally in flat cash price. And so what I've been telling people, they ask me the question, how much more are we going to get? And I say, well, what's 60 times 250 bushel corn? And that's $160 an acre, $150 an acre, I believe. With that being the case, Stu, it's the same thing that you've heard me say before. When the market rallies, we get bullish, and that's not the way that we're supposed to handle this. So Farm Doc team, which I'm going to be speaking with, Joe Jansen here in a little bit, those guys were really good in saying, hey, this year is going to be a rough one. $130 an acre is what they forecasted the normal loss would be in Central Illinois highly productive farm ground. If you just had a $150 an acre rally, and due to the price of corn, and you're still expecting more, I think you need to really reevaluate that.
So, as far as politics, do you see any politics pushing or pulling either corn or bean markets in the incoming weeks or months?
I mean, ultimately, the tariff discussion, in my opinion, there's a lot of negotiation going on. There's a lot of threats being made. Those are designed to elicit a response. I don't know what's going to happen there. What I do know is that we did it last time around, and I hope that they've evaluated, did it get the desired outcome? And I know a lot of people say, well, it really hurt the price of soybeans, and I'm not sticking up for anybody, but if we also remember back in 2019 in August into 2020 in January, or 20 and 21, I can't remember. I'll tell you what, you saw a huge influx of Chinese imports of corn. And what was that due to? Well, I'm pretty sure it had something to do with this phase one trade deal. So my personal thought on tariffs is that we don't know. We just don't know. Moving forward, some of the people that President Trump has said he's wanting to put as department heads concern me somewhat. But at the same time, I do feel like Trump is very well aware that U.S. agriculture is a big part of his voting base, if you will. And I think last time around, when he realized how much he was hurting growers, I know growers don't want Trump bucks. I know they don't necessarily want that. But I think that they appreciated it when they realized that he'd hurt them, that he was going to try to make up some of it. So I don't know, Stu. I mean, to be honest with you, tariffs, we don't need them. I hope we don't get them, but that's not up to me.